Quality of life insurance covers multiple needs with just one policy, so it really helps families secure their financial future. As you've already heard, quality of life insurance is so appealing because of the accelerated benefit rider. This rider can provide you with money in the event of a covered critical, chronic, or terminal illness. This is especially important for single parents who are providing for their children without the additional financial and emotional support that a spouse or significant other can provide. Many parents today are single moms or dads, and for them in particular, providing for their children's economic well-being is of vital importance. In fact, according to a study released by the U.S. Census Bureau, there are approximately 13.7 million single parents in the United States today, and those parents are responsible for raising 21.8 million children, or 26% of all the children in the U.S. today. Considering the fact that single parents are responsible for raising over a quarter of America's children, let's see how quality of life insurance may help a hypothetical single mom. Amanda is 33 with 2 small children. She's raising her children on her own because sadly her husband, Mark, passed away. Mark served his country with bravery and honor and died just a few months ago. Understandably, Amanda is devastated, but knows that it's more important than ever to make sure her children are taken care of, since Mark will no longer be a presence in their lives. Amanda did receive a life insurance benefit from the government upon Mark's death, and this money really helped her and her children make it through the first tough months. Once Amanda had paid Mark's final expenses, moved her family off the military base, and paid a large down payment for a new home in a nice neighborhood, there wasn't much money left. Amanda realizes the benefits of life insurance now more than ever, so she wants to take extra precautions to protect her children should something happen to her. She wants to be able to pay off the remaining mortgage on the family home and also be able to provide for her children's education if she should die prematurely. Furthermore, Amanda wants to leave ample money for her sister to use as the legal guardian of her children if she should pass away sooner than expected. Amanda has tried to think of everything necessary for her children's financial security should she die prematurely. Amanda meets with her AGLA agent and decides to purchase a $500,000 quality of life insurance policy that includes the accelerated benefit rider. She also decides to purchase the defined accelerated benefit for a modest additional premium. The defined benefit allows Amanda to choose any amount between 5 and 15% of the face amount of her policy as a benefit payable upon diagnosis of one of the covered illnesses or conditions under the rider. Amanda decides to purchase the maximum benefit of 15%, which in her case equals $75,000. Sometime later, Amanda is diagnosed with invasive cancer. Fortunately, this is a covered illness. Amanda files a claim for her defined accelerated benefit of $75,000, which is payable regardless of the actual impact to her life expectancy. Remember what acceleration means. Amanda is choosing to receive a portion of her life insurance benefit now, before her death. This reduces her life insurance coverage and policy values, meaning there will be less benefit available for her beneficiaries after her death. Amanda receives $75,000 as a defined accelerated benefit, which can immediately help her family while she is in recovery. Amanda's $500,000 quality of life insurance policy is reduced by the $75,000 benefit she receives as a lump sum, which still leaves her family protected with $425,000 of insurance coverage on her life. Additionally, since her life expectancy is moderately impacted, AGLA offers her $127,500 under the no-cost flexible accelerated benefit for the balance of her policy. Amanda can accept this if she wishes, but she chooses to keep the full remainder of her $425,000 life insurance coverage. Amanda decides to take a leave of absence from her job and spend time with her children. The $75,000 Amanda receives allows her to do this comfortably. Amanda is also able to provide travel arrangements for her mother to come stay with her and the kids during her recovery time. The money Amanda doesn't need for living expenses and travel expenses for her mother, she uses to cover the out-of-pocket costs not covered by her group health insurance through work. This defined accelerated benefit payment makes all the difference in Amanda's quality of life during her struggle to overcome her illness. Her story is just one example of how a policy owner may choose to use AGLA's flexible and innovative quality of life insurance during her lifetime. It truly is life insurance you don't have to die to use. Now think about your family and how their quality of life could be impacted if you suffered a serious illness or if you were to pass away prematurely. Now think about how their lives could be improved with your decision to purchase a quality of life insurance policy from AGLA. Because quality of life insurance is life insurance you don't have to die to use, it can be extremely helpful to you and your family should you suffer any of the multiple qualifying events covered by quality of life insurance. And remember, if you're fortunate enough to remain healthy, your family will receive your entire life insurance death benefit when you die. So either way, purchasing a quality of life insurance policy makes sense. Your AGLA agent can help you decide how this innovative and affordable insurance solution can work for you and your family today, while you're probably in good health and can qualify for this important coverage. Remember, it's your money, your insurance, your choice.